big week for Bitcoin as the cryptocurrency is bouncing back, now trading above 4,000 and rallying about 15% just since Monday. So is this the start of a real rally or just a head fake? Let's bring in Michael Bucella, a partner at BlockTower Capital, a leading crypto investment fund. Welcome back, Michael.
Thank you for having me.
So you make the argument that you think that Bitcoin is moving from weak hands to strong hands. I thought that's what happened from 20 to 6. So what's happened between 6 and 3 and change?
So it's a long distress cycle, and I think the weak hand to strong hand argument is actually quite relevant now. The problem is strong money, strong hands are actually quite patient. And so I think a lot of the volatility and the gap risk we see in the market right now is a function of the participants that are still there. And I think, as we just mentioned about distress cycles, I think we're actually in a significant distress cycle in crypto. And the last leg of that is typically the most volatile and most short-lived. And so when you think about has the bottom set in, I think you probably have one more leg lower.
Which is how low?
I won't make a prognostication about where the price will go.
Are we talking below 3?
It could fall another 50%, 2,000 from here. But I think that opportunity will be very short-lived. And I think the level we're at right now is a great long-term entry point if you're accumulating. And so if you think about the best investors in the world, the Howard Marks of the world, they're very patient. And they wait for that last leg of the distress cycle to set in. But the smartest money is moving in, right? You've seen MIT, Harvard, Stanford, Yale, right? They're all entering this space. They're entering through the private side in the venture markets.
Which is different from investing in the cryptocurrencies
Which is quite different, right? So that's the private side of the market.
Okay.
And so, most of those portfolios are investing in companies who are building the infrastructure for the broader crypto asset space, which includes the public markets.
Okay, so in the beginning, maybe when the weak hands were prevailing, there was the argument that when you invest in cryptocurrencies, you're also investing in the blockchain. You cannot separate the two investments. And yet here we are in a situation where we do have institutions investing in the company side of things into sort of the blockchain applications and not in the cryptocurrency. We have seen a collapse in the cryptocurrency, but it seems like people are still building platforms,
there's a lot
and
of
programs
building
and
happening.
ecosystems.
Yeah.
So is that argument out the window in terms of cryptocurrency being a sort of measure of the vitality of the blockchain?
You certainly should separate the two. That being said, there's a lot of building happening at the crypto asset level as well. And a lot of the smartest engineers in the world are flocking to this space. But I think when it comes to the public crypto markets, I think what we actually need to see and what everyone's discussing right now are macro cycles. And I think you actually need to see a different macro cycle than we've seen since the existence of Bitcoin, which has been a rate lower environment, essentially a zero rate environment. And until we see a global rate hike cycle or something of that nature, it's going to be very hard for a risk parity strategy or a macro portfolio manager to put Bitcoin into any of its correlation matrices and be able to accurately price risk or feel comfortable putting in some type of risk framework around the asset class. So what I think will be a headwind for the broader macro asset classes, I think will actually be a tailwind for the adoptance of the public markets.
I'm sorry for being so obtuse, but what makes a difference what global central banks are doing in terms of the investment thesis for Bitcoin? It was never part of the thesis before.
So this is more from an institutional adoption perspective. So if you look at a macro portfolio manager, they invest across multiple asset classes because there's a lot of history in those assets, and they've seen multiple cycles. We've only seen one cycle in Bitcoin. Bitcoin was birthed in 2008. The market's gone one way since
How about
then.
all the charts that people bring in overlaying past busts? Are those cycles or are they not cycles? This is all part of one giant cycle? Because people are saying that we've seen this kind of bust before, and they overlay the charts of the drawdowns of 80+%, and there are quite a few of them in the history of Bitcoin.
Yep.
Yeah, you're saying we've only seen one cycle in Bitcoin.
Yeah, the boom-bust cycles. Again, it comes back to market participants and also mispricing the evolution. Basically saying there's value being created in the long run, but they're trying to front-run that value creation. And that's a very difficult game to play. And it's also a very difficult game to play as a swing trader. And the biggest swing trader in the markets are the retail investors. And that's still pretty much the majority of the volume in the space. And so when I say it's important to have those macro portfolio managers involved, it's because you need to really dampen the volatility in this space. And that's only going to happen with more professional money management.
Okay. Michael, thanks so much for coming by.
Thank you very much.
Michael Bucella. Tim?
Well, it's a tough time. You know, the dedicated hands are not going anywhere. The question is whether are some of the smartest guys in the world, like Howard Marks at Oaktree, you know, institutionally ready to do this. They certainly weren't a year ago. They're probably less so now. But I do think that central banks matter, because I think central banks dictate the cycle of risk tolerance. And I think if we go into a place where you get even less risk tolerant, unfortunately, yes, diversification, but not a place I think people are going to be running. I think it's going to be a tougher time.
I think you have a big problem with cannabis entering the scene, where you have alternate investments taking sort of a little bit of the spotlight. And there's a lot of dollars that chase both Bitcoin investments and cannabis. And you could look at it on a chart. It's hard to deny
I think
money
they're totally
came out.
different, though. I mean, I
Well,
get that they're new asset classes.
Split them up.
Split them up.
It's the same from guys that have these desks. You wind up, they chase the same dollars. I think Tim and I have the #1 amount of 2 boxes.
I
Is that
think so
ironic?
too. I think we should have a little 2-box counter.